All right. So thank you one and all for joining our panel discussion for Road to Financial Freedom. Now, I know that word is rather broad. So, of course, my goal is to make this as simple as possible. And on this discussion, I'm really excited to have two additional speakers who's going to touch on their financial expertise when it comes to financial freedom. Because, of course, there's so much different avenues you can take. There's so many different things you can do, and in the space, and especially in such a time like this, it's so important to understand your finances and to get on this path of freedom. My name is Natasha, and I'll be discussing the 3 B's of financial mastery. So I'm going to touch on budgeting, bookkeeping, banking, and a little bit about taxes. Now, this is where I feel like my level of expertise is going to shine the most. So I thought it was most important to talk about this. So a little bit of my background for those who don't know. I am an accountant. I'm a certified bookkeeper. And, I decided to throw in the fact that I am a technician. I do all the integration when it comes to like bookkeeping, apps, helping customers get on the roll or just get on the journey of integrating and teaching them about technology. I've been doing this for over a decade. I actually quit my job so I can do this full time. I love to help people. I feel like in this journey, and of course in this process, that the more we're aware, the more we know, the better equipped we'll be. I love myself some Jesus, praise him, and I'm an avid traveler. So again, this comes from your passion, but also from my level of expertise. All right. So why is it important to budget? Because you don't want to live paycheck to paycheck, right? Just in case an emergency comes up, you want to make sure that you have the funds saved in an area where you're like, hey, I don't want to live paycheck to paycheck. And even if I can save 20 cents, if I can save $1, it makes sense that every time you get paid, that you go in and you put some extra money in there, right? Because emergencies does come up. All right. Now, let's say, for example, you want to plan for a family. And even if you're not necessarily planning for a family right away, it is very important that you even put that away from early as possible. There's some different avenues you can take when it comes to creating a baby fund, but I think it's important, especially if you want to become like have a family of your own at one point. It is important to start even saving for that. And of course, a car, a house, loans. I'm not sure if anyone else is paying student loans, but I figured out a amazing way to pay back my student loans after saving every other dollar that I have. I save pennies at a time. So I actually use an app called Apportion. It is formerly known as Digit. And all you need to do is connect your checking savings account. And every time you put a deposit, it will just take out depending on how you pay your bills. So if you pay your bills from one checking account and your bills on average is about $2,000 for the month, they will then pull out accordingly from your bank account, and they won't take out more than what you have left over. So say for example, one month you ended up having $2,100 and your bills, they calculated that it was $2,000. They will take out that minimum about 50% or less, and then every change on the dollar. If you use this link, you get $5 just for joining, and then so do I. So that is the direct link if you want to, and I can always share it again later. But if you get it, it's $5 they'll give you, and that's $5 they give me. I think budgeting is extremely important. And of course, if you have any questions, we're going to save this all towards the end. So please make sure you write down all your questions. Okay. All right. So what happens at the end of the tax year? All right. I just give my accountant or my tax preparer the numbers and they will file my taxes. I'm good. Wrong. You don't ever want to just give your accountant or your tax preparer the numbers. Okay. If you have a good accountant or a good tax preparer, they would actually ask you questions such as your credits, your deductions, those withholdings, those important questions a good accountant will ask you, but at the same time, it is good to educate yourself on taxes on those purposes. Now, again, this is from my opinion. I do it and it works amazing. Okay. You do want to do bookkeeping because you would like to know where the income that you're receiving, whether that's interest income, you got your tax return, you got a profit if you have a business that you're running. You want to know how much money you are getting every single year. You want to know every dollar that comes in, every dollar that comes out. Even if you're not running a business, it is good to know what your numbers look like at the end of the month, end of the quarter, or the end of the year. And then when you pull that financial statement to your accountant or your tax preparer, you'll give them with some additional knowledge of like, okay, this is what it is to the T. And then on top of that, I do like a deductions class where I go over all different types of businesses, and I can share with you over 300 different ways that it might apply to your business, how you can receive some tax deductions. Even for those that don't have a business, we can talk about that. There's ways to go around that too, right? But I say the quickest and easiest way to get your taxes done is print out a sheet, give it to your accountant. So if you have that P&L, which is a profit and loss, a balance sheet, if you have that, those are the two numbers when you have a business that your accountant needs. But it is important that even if you don't have a business, that you can pull out what we call a category summary, and it goes over your expenses and your income. And that's good for personal expenses as well. You don't need a business to have a good bookkeeper, okay? All right. And then last but not least, we're going to talk a little bit about banking, okay? So if you're considering to start a business, I am recommending that you get a separate account, okay? I know there's sole proprietorships, which people necessarily don't need another bank account because you are you're filing this business for yourself or as yourself. But when it comes to any business that is not its own corporation outside of a personal expense for yourself, you need to have a separate bank account. Never mix the two. I know back in the days when I used to do some auditing for some companies, I would ask the question, I don't think Disneyland is a business expense, but it happened to be there. And I was very keen about, okay, I'm not going to commit fraud. So if you want someone to commit fraud on your behalf, that's okay. But you do need to write that in as a personal expense and not a business expense. Okay, write that off as your what they call it, your draw. Okay, that is your draw. If you took it from your business, it is now your draw. All right, definitely pay yourself accordingly. If you're going to pay yourself from your business, which I do agree after some time you should pay yourself, we can talk a little bit about that in more details. Write yourself a check. Do not Zelle the money to yourself. Write yourself a check and sign it to yourself. And okay, so again, this is personal opinion. I actually don't pay my taxes until the end of the year, because I like to see what my expenses were, because even if my business is for myself, I would like to know where my deductions are. I don't want to just pay and then collect a check or a refund at the end of the year, but that's okay too. But what I like to do is open up a CD account, because what happens is my tax dollars. So for example, if I made $50,000 in profit 1 year. Now, say for example, I did a class on this to understand what your tax bracket is, okay? So if I fall into the 32% tax bracket, and that's not 32%, because remember, not gonna tap too much into it, but say for example, you get tapped at each level of your income. So I know there's an 11% and it goes up to about 11,000. Don't quote me exactly on the numbers, but depending on how much money you make, they're capped at different tax brackets, okay? So what you wanna do, if you're already gauging for the month or the quarter that you're ranking about $50,000 or whatever your profit is, make sure you're taking out the taxes accordingly for that year. And then the next year you throw that money into a CD account. Because give or take, you're probably making about the same amount of money if you're working a job, and or if you're working a business that's pretty stable, you can do that. And CDs have a nice interest rate on it, which is really good for you. And of course, if you have those extra deductions and expenses you can claim, throw that into that at the end of the year, and the tax that you have to pay goes down tremendously. You can go into that more details. If you're going to claim anything on your W-9, please claim at least one and one for federal and state. At least claim that. Don't just claim 0, 0. Okay, you're literally throwing your money away. No one ever gets exactly 100% back on all of their federal withdrawal. Like, it's not saying it's not possible, but it's not as likely. Okay, so at least claim one-on-one on state and federal. And then, of course, like I mentioned before, opening a business account just opens up to a higher tax benefit for you.
So I'm going to be talking about financial planning, investing, less on the life insurance, and more about the retirement savings. So my name is Casey Gordon, and mine is a little bit more wordy, but I serve women of faith who are going through some kind of transition. I love to educate people on their finances. I've been in the profession for 24 years, but I'm only 25. Y'all don't do any math. I'm really serious about that. Don't try to figure it out. Yeah, Natasha, don't laugh either. Um, so my background is that I worked with ultra high net worth clients. And then my question was like, who's helping the woman who's just like me, who's making the money, who's doing whatever else, but they don't necessarily have the guidance. And so God opened the door, and I'm here now. I launched my firm 2 years ago, now helping women with their finances. I love to travel as well, and doing all the things. And I'm a mom, proud mama. Okay, so investing. Why is investing important? I did a YouTube video, guess sometime last year, that says you cannot save yourself to wealth. You cannot save yourself to wealth. Sometimes I think we've been taught that saving is important, and it's absolutely very important. However, once you get past a level of savings, you need to start considering what investing looks like. And how can I get started investing? Without even realizing it, if you have access to a company 401k plan or retirement plan, that's how you get started with investing. So that is usually the first foray that many of us have with investing. Um, Making sure that, thankfully, now they have what's called a target date fund. So you can just look, see when you're about to, what year you'd retire, and you can choose that option. It usually has a bunch of other options, but for many, I'm going to say for many, the target date option is a good enough option for what you can do. And that's being managed by some of the big name companies, depending on who's the administrator of your plan. Um, I can't stress it enough. If you have access to a company 401k plan where they are matching, making sure that you are putting in at least the amount to get matched, because otherwise you're leaving free money on the table. What are some things to consider before investing? You want to make sure that you at least have some money set aside. So whether it's your emergency savings fund, an emergency savings fund, and this is where budgeting, as Natasha was talking about, is so crucial. Um, Emergency savings fund, if you are a two-income household, you can have 3 months of your expenses set aside. So if you spend between the two of you $2,000 for your basic necessities, you want to have about $6,000 saved. Now, if you are a solo individual, you want to try to get to 6 months of savings set aside, right? And whether it's a CD or a money market or a high yield savings account, those are some of the options that you can use as well. Let's see. Yeah, so you want to make sure that you have a relatively strong foundation, because what you don't want is you start this investing outside of the retirement accounts, of course, but you start this investing process, and you need the money. Some emergency happens and you need the money, and you need to go to the investment accounts and the markets are down. That is not going to be a good feeling if you had $1,000, markets are down big, and you need that money and it's only $800. That's just not going to be a good feeling. So, and also when you have that emergency fund set aside, you don't have to worry too much about what the markets are doing. You can allow that money to go for long term, because otherwise, if you're only $1,000 and you see the markets going down, you're going to pull that money out at the wrong time, and then you're going to lock in your losses, as opposed to allowing that money to be able to grow over time. So I'd say those are some of the big things to consider before you invest. Roth IRA, traditional, or 401k plan, which is exactly where I was going to. What is the difference between the two or three, and which ones should I invest in? So a Roth IRA, let's actually start with a traditional IRA. A traditional IRA, you get the tax benefit today. So traditional IRA and traditional 401k plan, you're going to get the tax benefit today. So if you have $100 of income and $100 of gross income, let's just easy math, and you put away, let's call it $5,000, your taxable income now become $95,000 um, I'm using different numbers. Wait, $100 and you put away $5. Let's use easy math. $100 and you put away $5, your taxable income is now $95. So that reduces your taxable income today. And that money will grow tax-free until you start taking it out. If you try to take it out prior to 59 and a half, you will have a 10% penalty, plus you will have to pay the taxes. If you wait until after 59 and a half, the penalty, the 10% penalty goes away, but you still have to pay the taxes. The government gave you a free benefit or some benefit in the beginning. They want their share at some point, right? So you know you're always gonna have to pay the taxes. The Roth IRA now, and this is a great tool, depending on how you feel about whether tax rates are going to go up, or if you're in a low tax bracket and you don't necessarily need to get the tax deduction today. So a Roth IRA, you put that money away today. So if you have, same example, $100 and you put away $5 for your Roth, you're still going to have taxable income of $100. So you're not going to get a tax benefit today, but because you've already paid the taxes, that $5, if it grows to $5 million, you will not have to pay any taxes on that money ever. And again, within the rules of what you need to do. So a Roth is great, but the key is to make sure you understand which is going to work for you. And by the way, there's no hard and fast rule that says it's one over the other. You can have both. If you have access to a Roth 401k plan and a traditional 401k plan, you can absolutely invest in both. So you can get some of the tax benefit now and allow that money to grow and pay the taxes now and get the tax benefit later. So it's nice to have monies in both sets of buckets. And I'll tell you that having that, and I started doing that probably 15 plus years ago, and that has saved me in my financial life tremendously even now. Let's go to the next slide. So let me just fix one thing as we're talking about taxes, because this is also an area where I talk about a lot. Just in terms of taxes, and going back to what Natasha said, sometimes you can wait all year to pay your taxes. Sometimes you're required to pay quarterly estimates. So if you are in the situation where you're required to pay quarterly estimates because you made a lot of money the year before, and the government says in order to penalty proof your taxes, you need to pay quarterly. If you don't pay your quarterly taxes, you are going to end up paying penalties if you are under withheld. So just wanted to add that point to it. Sometimes you can wait, and sometimes you can't if your accountant has told you that you need to be paying quarterly taxes. A financial advisor is helpful to have, right? Because they can help you to see the blind spots that you may not necessarily see. The key is to understand. I think I wrote an article some time ago, what to look for when you're looking for a financial advisor. You want to understand how the person is paid, one. You want to make sure that it's somebody that you want to work with, and they're going to take time to explain to you what they're doing, how they're doing it, all the things, right? Not that you're going to micromanage them, but they're going to educate you. You want to be able to comfortably ask questions without them feeling like you're being, without them not feeling like you're being a bother. So those are some things. And again, choosing what's important to you. Now there are far more financial advisors out there. The key is, again, to understand how they're being compensated, and if you want a relationship with them, because this is such a relationship based thing that you want to be able to be confident and be able to ask your questions. All right, financial planning. Financial planning is focusing on quite a few topics that are important to you. Budgeting is one of them, budgeting, and we call it cash flow, right? That is almost the foundation on which financial planning is built. Taxes, if somebody can help you look at your taxes, understand your taxes. Insurance, it's the necessary part of your portfolio, it should not be the whole portfolio. And making sure that it's life insurance should be used as a protection. I don't necessarily believe that life insurance should be investments unless you understand what you're purchasing and why. What else? Estate planning, that's also part of financial planning. So if something were to happen to you, if you're a mom, or, I don't think there are any men on here, but if you're a mom or a dad and you have kids that you need to take care of, or a spouse that you need to take care of, if something were to happen to you, you need to make sure that that's in order, because you don't want people guessing what you would have wanted. And I know that there are lots of young people on. No matter how young you are, you still need to have an estate plan. It could be as basic as ever, but these are your wishes that you are putting in writing. And it's not just having a will, it's also having things around it. So if something were to happen to you and you were still alive and in the hospital, who would be able to take care of your affairs while that is happening? Again, these are some things why having financial planning done, or being able to have the conversations. And again, the budgeting aspect is almost the foundation, what I consider to be the foundation of being able to look at the holistic financial plan, because then you know what else you're able to do, whether it's saving or investing, or what are the goals that you're looking to accomplish.
Okay, so good evening, everyone. My name is Miss Scott, and I am here to talk about retirement goals. Of course, I'm still trying to. Oh, I see it. I see it now. Okay, so my specialty is market loss prevention, market goals, and family banking, especially versus the 401k. I believe wholeheartedly good, better, and best. And basically, I want to give you as much information as possible so that you can make a healthy decision on retirement goals that will suit you. All right, so here's my background. So I was born and raised in East New York, Brooklyn, pretty much a child of poverty. I could have been a statistic very easily, but I didn't, thanks to my very strong Jamaican parentage. I'm currently a matriarch of two families, especially since after my parents passed away, everyone pretty much looked to me for financial structure and financial stability. I'm also a former licensed real estate agent and property manager in Manhattan. I specialize in new construction. My father was a general contractor, so that's why I specialized in that. So I still have my eyes and ears to the real estate market, as well as I'm a recently retired ICU nurse. I've been a nurse for 13 years, and throughout the entire time of COVID, I worked as an ICU nurse. And now I can happily say I am retired. And we'll go in more into how I was able to retire recently. I'm an experienced commodities investor for over 13 years as well. Currently active stock and options trader. Thank you very much, Ms. Gordon. Okay, so I ended up being a commodities investor, especially after my parents passed, because I wanted to preserve what they left behind. It was very important for me to not lose, God bless, what they were able to leave behind, especially when it came to life insurance products and money market accounts and CDs and 401ks and pensions. And I'm currently a licensed life and health insurance agent, licensed in 13 states. My specialty is to help people not only protect themselves from market losses, which in this financial uncertainty nowadays, you need to be able to have every single product at your disposal that can prevent that for you, and also prevent you from taxes, bankruptcy, probate, divorce, and even lawsuits. Okay. So this is my sister. She unfortunately passed away at 38. She left behind 3 children. The reason why I bring her up a lot is because we didn't see it coming. No one saw it coming. But at 38 years old, all of a sudden she had heart failure, congestive heart failure, all types of health problems. And her story can be anyone's story. The fact of the matter is that she was not prepared. She did not have life insurance. She did not have any type of insurance to where she can pass it down to her kids, where her kids would be safe. As a matter of fact, her kids were pretty much homeless for a number of years after she passed away. This is very serious. So how many people do you know are pretty much in the same situation, or where they passed away and their children were not financially protected. So 90% of Americans, unfortunately, don't have a pension plan. And roughly 78 million Americans, half of American workers essentially don't have access to employer-sponsored retirement plans. So guaranteed income, whether it's a job, a good job, stable job, Social Security, pension, cash on hand, which could be a savings account, revenue from a business, very good, consistent revenue from a business. Then you have insurance, which is it could be bank accounts, which like CDs or money market accounts, life insurance as well, like final expense, something that will cover your funeral costs. Homeowners insurance, renters insurance can be very important. Health insurance as well, and car insurance. These are basics. And then going up the pyramid, interest-bearing accounts or appreciation of assets, which will continue with cash growth. Because you want to have each dollar working for you and making more dollars. You want each dollar to be getting 2 or 3 extra dollars. That is called compound interest. And then you have the next level: longevity, disability, terminally ill, chronic or critical long-term care insurance. These are critical. As an ICU nurse, I can tell you, I was working blind, literally not covered at all with chronic illness insurance or long-term care insurance. God forbid I got sick, they would easily replace me at my job and I'd be at home broke, right? With no income coming in. Thank God I'm a little smarter than that. But I do have something that is even better than just having basic disability insurance. But you definitely want to have that, especially if you're in an occupation that is and can be potentially hazardous. And then, of course, at the top, very last top is legacy, wills, estate planning, life insurance. But there's particular life insurance products that definitely ensure that your legacy is intact and will remain for generations after you. And estate planning is crucial, as Ms. Gordon was talking about earlier. Estate planning, you need to have that. I don't care how young you are, it is important to have that. And of course, wills. I remember when my mother was sick and she was telling me, I don't need a will. What I need, I barely have anything. No, you should have a will. I don't care how little bit that you have. And you never know what kind of circumstance that you had. Your financial circumstance could increase and even improve over time. But everyone should have a will in place, especially an advance directive. God forbid you get sick, someone can actually make decisions for you in the hospital. Okay, so these are the type of policies that I would like you guys to know about, and I'll go through each of them very briefly so everyone knows whole life. There's different types of whole life, though. There's index universal life, there's specialized whole life. Whole life is a special policy that will curtail to especially someone who's more than 65 years old, that might be a little too old to build up a fund in the index universal life, but can still benefit from living benefits, which of course, as term life and term life with living benefits, we can also add that to a specialized whole life policy. So a lot of these can be combined. It doesn't have to be separate, and they can fulfill different needs that you may have for yourself and your family. Final expense, of course, is just to cover final expenses for your funeral costs. Mortgage protection. This has been a big one. This is hugely popular because a lot of people, when they pass away, they don't have an insurance policy in place to cover their mortgage. That's quite sad. So mortgage protection basically covers and pays off the entire house as soon as the breadwinner passes away. And finally, fixed index annuities. Oh my goodness, this one is literally a private pension. $1 baby strategy, creating a legacy for children and grandchildren. So a lot of people don't have life insurance on their children. I understand sometimes people don't see the point of it, but in this instance, if you want to maintain a lasting legacy and you want to secure your children's future, you should absolutely have a policy on your child. Now, by law, you can have a policy on a child as young as 2 weeks old. And the policy has to be at least no more than half of the current policy of the parent. So just keep that in mind. Based on the laws, that's how it is. So you can start off having a policy on your infant 2 weeks after they're born. And it can be as small as $100 a month, $200 a month. It doesn't have to be that expensive. It could be within your budget. And you will see over time as that child grows, the fund grow with it.